The focus of this video will be on 401k and IRA. And so what happened when we withdraw money from these accounts or making contributions to these accounts. So here we have a case of a single filer, John Smith, and his 2024, the taxable wages is $100,000. And then also in box 12 right here, we see that there's code D, which is a 401k contributions. And so he made $8,400. He added $8,400 to his 401k. And then the code C here is his contribution to the health insurance. And so the $100 is pre-tax money, and then the $1,400 is also pre-tax money, meaning tax has not been paid on this $8,400, and it will be paid when John Smith withdraws money from his 401k. And in the year 2024, John Smith also made a contribution of $5,000 to his traditional IRA account. And so his adjusted gross income for 2024 is going to be the $100,000 here, minus the $5,000 that he, which is the contribution that he made to his IRA account. So 100,000 minus 5,000 would be $95,000. So this is the will be his taxable income. That'd be his adjusted gross income. And then for single filers for the year 2024, the standard deduction will be $14,600. And so his taxable income will be $95,000 minus $14,600, which is $80,400. And then we look this up on the tax table, then the tax will be $12,741. Let us look at the case where no 401k or IRA contributions were made. And so if John Smith here, if he did not make the IRA contributions, then his income for the year 2024 would be the 100,000. The 100,000 plus the $8,400 here. So that's going to be a total of $108,400. So $180,000, the standard deduction for single filers will be $14,600. So the taxable income will be $108,400 minus $14,600, and that will be $93,800. And the tax for taxable income of $93,800 will be $15,689. And so here's the summary. With the 401k and the IRA contributions, the tax is $12,741, and then without the contributions, the tax will be $15,689. Now, and then, of course, as mentioned earlier, all the money that were put into the 401k account and the IRA account, they will be taxed when they are withdrawn. And so here's an example. And before we get to the example, a couple of things to keep in mind about taking money out of the 401k account or the IRA. Remember that if money is withdrawn from the 401k or the IRA account before the age of 59 and a half, there will be a 10% penalty. And then the amount that is withdrawn will be considered as taxable income. And so here's an example. If let's say next year John Smith withdrew $3,000 from his IRA account, and let's just assume that he's before 59 and a half. And so the penalty would be $300. 10% of 3,000 is $300. And then the $3,000 will be added to his taxable income, because the $3,000 now become taxable income for the year 2025. And so one more time, the thing to keep in mind that if you withdraw money from your 401k or your IRA account before the age of 59 and a half, there will be a 10% penalty.